any sectors apart from the banking, as we have discussed in depth, what do you think so investors should focus on apart from the banking space, which we have discussed, as you have highlighted as well? Are we going overboard on the bond thing? So if there is any other theme which you would like to highlight in the consumption space or in domestic space that will do well going forward?
See, I would be happy paying dollars for anywhere, any sector that I see earnings growth. And if you see the market, bipolarity has been very severe. IT, capital goods, manufacturing, actually industries as a whole, has been beaten down for quite some time because there is no visibility on earnings growth. On the other side, if you see valuations for consumption-driven stocks, they've gone through the roof. If sitting on these two chairs about say 3-4 years back, if you had told me Maruti would be trading at 30 times 1 year forward, I would have probably thought you're joking, but the fact is that it is. And
what's next?
Exactly. And you know, since you were talking about long-term investing, Maruti is a test case. It's been one of the best performing stocks in the world. If you remember about 4 or 5 years back when the strike happened, it was at 950 rupees. Today it's at 9,500. Or it must have seen a bit of a correction, but that market cap stock giving you a 10x return just shows you the power of compounding in equities if you're able to stay the course. But I think anything to do with domestic consumption, especially since this budget has gone overboard in trying to revive that, I think staples would still do well. You know, look at places where market shares are high or they are very few players in the industry. So something like a Hindustan Unilever, which has grown its operating profit by 20% consecutively in the last 2 quarters. Something like a Gillette maybe. Anything in discretionary consumption. You know, we've discussed Jubilant Foodworks briefly. Cinema stocks, PVR, Inox. The government is looking at affordable housing and electrification in a big way. So I think electricals and durables, you know, names like V-Guard, Havells, Whirlpool, IFB, they'll have a very big role to play, keeping in line the government's vision. Auto, I think, could be a very strong story. I still don't think we've seen the penetration. Absolutely. I mean, and if you're...
They are not, you know, far away.
Absolutely. The bigger ticker for auto anchors is the replacement cycle. And I'll give you a small example. You know, we've been very bullish on Royal Enfield, Eicher Motors. And Eicher did not start off being a Royal Enfield story. It was the Volvo Eicher JV. And subsequently, it's become a Royal Enfield story. But, you know, the Royal Enfield story sort of started picking up only at the start of this decade, 2010, 11, 12. So there is a replacement cycle that comes. And when the replacement cycle comes, the auto anchors have a very, very big role to play as well. So I think tires could be a very big proxy to play in terms of auto. Tractors, you know, names like Swaraj engines, VST tillers. These are names that people can look at that are fairly structural in nature and consistent with the way the government sees consumption.
And monsoon announcement is just maybe a 2 or 3 months away from here on, where you can get a clear picture, and then you can see the cycle upturn. All right. So we are talking about, as you have highlighted in depth, about the domestic consumption players as well. Very quickly, domestic or global players, who will do well?
I think domestic, because you know, when you're talking about global, there are too many data points to track. So for example,
global metals are very, very strong.
Absolutely. But you know, taking a call on commodities is basically taking a call on China. And sitting in India, I don't know how much we can actually analyze China, because it's a fairly closed economy. Their data is fairly regulated to a very large extent. And commodities has never been a structural play. It is very cyclical. It has its periods. It may have 6 months, 8 months, at best a year, and then you know you'll find other sectors doing much better. But you know, for the benefit of your viewers, I would say that one sector that people have virtually stopped talking about, and you know, it is almost like the stepson or the stepdaughter of the market, which could positively surprise over the next 12 to 18 months, in my view, is pharmaceuticals. You know, because if you go back maybe 2 years and you look at the projections that people have now for FY20, almost 75% of those projections that are due for FY20 should have actually come through in FY17. True. The point I'm trying to make is the damage has been so severe in that sector that if the turnaround, absolutely,
the confidence is not there.
Absolutely. And if you go back to the conventional way of you know, investing that Graham and Warren Buffett talk about, you don't shun a business just because it's going through a bad time. You shun a bad promoter.
Perfect.
But this is a good, you know, these are good promoters going through a bad time. And I don't think at any point in time the US FDA has said we don't want Indian companies to do business in the United States. They're saying just be compliant as per our norms, which is no different than what our government is doing with its Make in India project. And when we feel the need to impose import duties, we're doing so. So we have not told any global players that they're not welcome. I don't think the United States is doing that. And if you just look at the generics market in the US, almost $20 billion worth of drugs are going off patent in the next 3 to 4 years.
Right, that's a big opportunity.
It's a very big opportunity for, not only the frontline, even the mid-cap names. And for me to believe that a Cipla or a Reddy's or a Sun or a Cadila or a Lupin cannot be 2x or 3x their size over the next 10 years, it doesn't add up. They should be, because the opportunity size is so large.
Very quickly on the pharma, one last question I would like to ask you is the global theme, as you have said that in 2 to 3 years, but is the game is changing from the overseas play to the domestic theme? So is the domestic theme much bigger than the global theme which we were banking on, which we have invested on, or which we are eyeing for?
See, there are two ways to look at it. One is the higher delta in terms of stock price appreciation will come in the names where they have higher US exposure.
All right.
Because they have been the ones that have been
beaten down. So global will still be the theme for the...
Yes, but if you want to play a hedge, if you have a slightly shorter term view, say 6 months or a year, and you want to have an investment in pharma, but you want to look at a hedge saying, these guys are not that exposed to the US, so there is no risk when I wake up in the morning that I read the headlines in the paper, then you can look at names like Cipla, for example, which do not have. But I think, if Halol gets resolved, if for Sun Pharma, if Srikakulam gets resolved for Dr. Reddy's, and so you saw what happened to Cadila after their Moraiya facility got approved, the stock went in a one-way move. That delta, because drug approvals will come through at a much faster pace, and a classical example is Aurobindo. A few months back, when they got the approval of Renvela, which is a multi-billion-dollar drug, it was an index stock, or probably is for a few more days. The stock went up 25% in a week, a nifty stock. And then as a fund manager or as an investor, if you don't have that in your portfolio, your NAV for that quarter suffers. So I think you should keep the faith, because there is the prospect of growth. And I don't think any frontline pharma company in India is coming to you more than 15 PE, which is, a very rare occurrence.
Very quickly on the valuation thing, what do you think? So Indian markets are fairly valued, or the valuations you think so is... Can you just throw some light on that?
Well, I have been fairly public in my views that I stopped understanding the equity markets when they crossed 10,000 for the first time on the Nifty. And we went 1,200 points higher than that to 11,200. I still think discounting FY20 earnings, we are probably 500 to 700 points higher than where we should be on the Nifty.
Sure.
If you average out over a period of time, you will find that earnings CAGR and market returns CAGR even out.
Sure.
In the 6 years, barring this last 1 year of my setting up this company, if you strip out the last 12 to 15 months, the Nifty CAGR and the earnings CAGR was about 5 to 6%. So I think this will even out. I think there's too much optimism getting built in terms of earnings. But if the Nifty was to come down to around 10,000, I think that I don't see it, barring unforeseen events, which could be global, which we don't know, maybe a shock politically,
so very
domestically.
Quickly, anything you see that can derail the big expectations from your own? Very last question.
I think an accelerated US bond yield towards 3.5%. I think once it crosses 3, people will start getting worried from a liquidity standpoint, because funds may start moving towards bonds away from equities.
Would you see a correction?
If there is a possibility. See, it's flirting with 3% right now. So the correction hasn't started.
How much percent?
Again, like I said, I don't, even if the correction comes, I don't see it going more than 500 to 600 points on the Nifty from here. Domestically, I think the biggest could be elections, because you have Karnataka in a couple of months.
So stay invested is the call?
Stay invested, but keep an eye on domestic politics and the US bond yield is my
Perfect.
sense.
Stay invested, keep calm, and you will get better returns. And we have talked in depth about sectors, including pharma. So this was Rahul Arora from Nirmal Bank. Thank you so much, Rahul, for talking to Ticker TV.
Thank you for
having me.
And
we wish you all the best.
Thank you so much. Thank you.